everybody, my name is Glenn Tompkins, Senior Instructor here on our YouTube channel. Always love bringing these videos to your attention. Today is a great video because major stocks had major earnings this week. And I'm going to point out and tell you what the analysts say about these stocks, and then we're going to take it a step further and see what the VectorVest System says about these stocks. If you're ready to find out what's going on, you sit right there. Hey everybody, Glenn Tompkins, Senior Instructor here at VectorVest. Again, love doing these videos, bringing them to your attention because it's going to help you to make better decisions on the stocks that you buy and sell, especially big name stocks that are out there. For those of you who are brand new to the channel, don't forget to hit the subscribe button, hit the bell icon so that you'll be alerted to when new videos like this come out. And most of all, if you like what you see here, don't forget to hit the like button. It shows us that it was worth your time to stop by and visit our channel to see what we had to say. And if you feel so encumbered to do so, please share it. Let other people know what we're doing here at VectorVest. All right, let's go talk about what's going on. Couple of stocks. Intel stock slumps 11% after poor earnings show softening demand for PCs. Interesting, when you see soft demand for PCs, personal computers. Why is that? I'm thinking that a big part of that is a lot of people are working from home. And now the companies that used to put in the purchase orders to upgrade PCs in the office are not coming through like they used to because not as many people are working from the office. So I'm thinking that that could be a big part of why there's a softening demand for PCs. I'm an Apple guy. I don't think there's a softening for iOS stuff. That's just me. Roku plunges 25% after missing earnings. Now, when I look at Roku's in a space that's a crowded space, and there's a lot of big names out there like Amazon Prime, Apple TV, Netflix, Paramount, Disney. And Roku was one of the originals that were out there, but I'm thinking there's another reason behind why I don't think Roku is doing well. Stick with me to the part till I get to that. There's a real reason why I think Roku needs to make some changes in regards to what they're doing. Exxon, wow, we know that oil has been rocking and rolling. It has taken a dip recently, but if you've watched me on any of our live streams or on this channel, I'm still thinking that oil is a good place to be long term. Why? Because supply is still not there and the demand is still high. Now, the demand has pulled back while we've had a big dip in oil is because a lot of people didn't want to pay the high prices for gasoline. So they stopped driving as much as they used to. That brought the demand lower. The supply issue made the supply issue look better because the demand had come down. But you know something, these companies are making money and then there's stuff talking about, well, they are gouging. This is called capitalism, America. This is what companies do. They make money for their investors. And what do they do in regards to that? They pay dividends or they buy back shares, whatever it is. It's called capitalism. So that's another story for another time, but they posted record earnings, and that's big. Also in the same space, Chevron. Record-breaking earnings tell investors to fill her up. These two companies, along with all the other companies that are out there in the oil business, are making money. Should they be giving some of it back? Listen, again, as a company, my job is to make money for my investors. And if I do a good job of that, I'm going to get more investors. That's what business is all about. So we're going to analyze these as well. Amazon shares jump after hours. Revenue guided up because it missed earnings. Revenue guidance tops expectations. So even though they missed one way, let's scroll down a little bit. Amazon shares jumped over 10% in extending them Thursday. They missed earnings. Posted a loss of 20 cents per share, 33 cents worse. But even with that, revenue for the quarter increased 7% to $121 billion. So it just goes to show a company can lose on earnings, But the revenue, why? Because people are buying still a lot of stuff through Amazon. You got Amazon Prime. They've got their hands on a lot of different things in regards to how to make money. So they can miss earnings and still be a positive for the company. Very interesting. And the last one, Apple. Apple tops estimate. Why? Because the iPhone was a big mover for the company. Net sales increased 1.9% year over year to $82 billion, which beats the Zacks consensus estimated by 1.19 million. That's 1.19% in our estimate of 81.47 billion. So as we look at those are the stocks that are out there, the big numbers, the big companies that either hit or miss in what they're doing. Now, the reason why I'm doing this video is because many of you may own them. I own Apple. There's no ifs, ands, or buts about it. I think it's a great company, but I'm going to talk to you more about that. But if there's any of these companies that missed earnings or are going down and you're wondering to yourself, should you still be holding them? Well, let's go take a look at what the analyst said. I put together a slide presentation. Hold on, where's it at? I put together a slide presentation from a good website that I do like, and this talks about different analysts that hold these stocks, starting with Intel. It's got an upside potential by way of these different analysts. Got 11, 14, 21 analysts, 21 ratings. 3 of the analysts have a buy, 11 have a hold, 7 have a sell. But altogether, this talks about a 12.13% upside. And again, this is the beautiful thing about looking at other people and looking at analysts. And we're going to take this a step further. So this is on Intel, upside potential 12.13%. Here's a moderate buy on Roku. Interesting. Moderate buy with a 45% upside based on 14 analysts. 45% upside according to what this is saying. Next one is CVX. And right now it's got a 10% upside, trading at $180 right now. Now, again, this is all based on analysts, different analysts that you can take a look at. Going over to XOM, so Chevron with CVX, XOM is Exxon, 12% upside based on 12 ratings. Look at this, Amazon's 30 ratings, 29 analysts are saying that this stock is a buy, 1 is a hold, none have a sell recommendation, saying that Amazon has got a 26% upside, and Apple, out of 19 ratings, 16 of the analysts have a buy, 3 have a hold, 0 have a sell, and the stock's got about a 14% upside. All right, now let's take those same stocks and put them through a rigorous process within the VectorVest software. Here's all the same stocks: Chevron, Exxon, Apple, Amazon, Intel, and Roku. Now, the first part of the analysis done in the VectorVest system puts these stocks that are in this watch list, all 6 stocks, and sorts them by our master proprietary indicator, VST. So the stocks that have the best combination of value, safety, and timing migrate to the top of the list. Chevron and Exxon are at the top of the list. Notice that they're also undervalued. We assign an intrinsic value on every stock, and these stocks are currently trading under their value. Why is that? Oil had been the beating horse for the market for the longest time, and then now on the rise once again. And these stocks have come a long way from being so beaten up to really rock and rolling right now, currently undervalued. Both of them have good upside potential with the propensity to outpace the market over the next 1 to 3 years. They are also safe in that when earnings come in, they have a high propensity to meet or exceed earnings, and they are in uptrends. Put those 2 stocks at the top of the list because by VST, they have the best combination. Followed by Apple. Now, Apple is currently trading over its value. That doesn't make it a bad stock. It just means that more people are in the stock than what it's currently worth. People feel that the stock is worth more than that at this particular point in time. Good upside potential, should outperform the market over the next 1 to 3 years. Good safe stock. Apple most times does hit or beat the earnings expectations, and it's definitely in an uptrend, even faster than the 2 oil companies. And then we look at Amazon, way overvalued. All right, and upside potential not there, but it's a safe company that is in an uptrend at this particular point in time. These 2 are my problem children, Intel and Roku. Now, you saw the analysts had a big upside on Roku. Roku is currently trading over its value. Let's take a deeper step. Both of these stocks, both Intel and Roku, have sell recommendations. Let's talk about the engine that drives these stocks higher. Earnings. All of the companies have positive earnings. Notice that Apple, Exxon, and Chevron grow their earnings in double digits. Amazon does grow it, but in single digits. Amazon's got their hands in everything to make it such a good company, but they're not able to grow their earnings as strongly, but they are still growing their earnings. Intel and Roku. So now let me tell you what I think about the both of these companies. They both have positive earnings, but they're not moving in the right direction. What I'm thinking that needs to happen for both Intel and Roku, they need to have a change in upper management. I think that they need some fresh blood in the system to be able to turn around the direction of the company. Again, both of them have positive earnings, but not moving in the right direction. And that normally tends to show leadership is not doing what needs to be done. I'm really thinking that both of these need to have some sort of change in leadership in order to get them back on the right track. All right, now let's talk about this a little bit more. All of these companies pay a dividend. Roku and Amazon do not pay a dividend. But for out of the companies that do pay a dividend in the list, they all have great dividend safety. So that's another side of Intel. Even though I think that it needs at some point in time a change in leadership, they do pay a dividend. It's a really safe dividend. Notice that Apple pays the safest dividend on this list. And that's important when investing in the company. If a company pays a dividend, you want to make sure that the dividend can still be made. So I'm looking at the dividend yield. Dividend yields, I've got dividend yield of over 3 for both Exxon and Chevron and over 4 on Intel. Remember, folks, don't chase yield, but these companies, by way of earnings yields, are definitely able to pay and make sure that they pay the dividends as well. All right, so I looked at these. I like the first analysis by looking at them from a VST standpoint. I think that oil is still a good place to be long term. Apple is just a great stock that's got a great ecosystem, and the phone is carrying them right now. Amazon is a good company, even though both of these companies that I like are overvalued, but they are making money, and that's important. And again, Intel and Roku are my problem kids. Let's go take a look at the graphs of these stocks. Now, am I going to give you, let's go put this on a year. Am I going to give you price expectation? No, I'm just going to tell you where they are right now. End of day, Roku. Not a good stock. Stock is leveling out, but the stock is right now, this is a 1-year low. And now the analyst that says that it's got 45% upside, the only thing that I'm looking at is maybe that people feel that the company's been beaten down. But here, it got beaten down, it ran up. It got beaten down some more, ran up a little bit, some more, leveled out. I don't think that they have the wherewithal. There's no good stuff coming out of Roku enough to spur investors to buy into Roku. And that's just what I see. There's the earnings per share. I'm going to put this on a different graph layout. Let's go find Glenn. Swing. Now I got a 20-day exponential moving average and just looking at some technicals. We've already looked at the fundamentals. I'm not sure that I'm really a fan of now Roku. Now, I do see that it's trading at a level of support sitting at 78, 75. It just broke down through with the earnings news. Could that be enough to spur it to move back up? I'm just saying that I don't feel that it's got the wherewithal to do that. There's CVX. Oil has been rocking and rolling, went through a little bit of a pullback, now bouncing nicely above the 20-day exponential moving average. Earnings comes out, it runs. Love the earnings per share. That's the engine that drives the stock's price higher. I think it definitely has some more upside. Same thing with Exxon Mobil. Beautiful move up. All oil stocks were rocking and rolling. They all pulled back together. Now Exxon's above the 20-day exponential moving average. It's trading not that far away from a 1-year high. Looking at Apple. Apple had its time where it got smoked, found a level of support, Nice uptrend above the 20-day exponential moving average. Earnings could be the engine that moves it higher. Currently, it's a buy recommendation. There's a lot of volatility that's going on with Apple, but I still think that Apple's a solid company. Looking at Amazon, a little bit of a sideways move. The earnings came out. Now, this is a little different story. I still like Amazon, but I'm not a big fan of the earnings, the engine that drives it higher. Over the last year, it's lower than it was a year ago. So was earnings going to be enough? And it split. Is earnings going to be enough to push this stock higher? And remember, it missed earnings. It's the revenue. Can the revenue keep it going? Possibly. We'll keep our eye on it, but a big gap up today after the earnings news. And then we have Intel. And I still think that with both Roku and Intel, there needs to be a change in the upper management to get these companies back on the right track. So, folks, it's an interesting take on these stocks, most recent earnings. Looking at what the analysts say, I went out to the internet, and I do like the website that I looked at to find the stories on what the analyst says. But I wanted to look at a difference between what you guys see and what we have to be able to provide for you as well. VectorVest is a great system to help you take a lot of the noise that's out there, fine-tune it, and focus you. Folks, this video is over. And until the next time, see ya.